Good afternoon, Neeraj. So we have seen some price hikes being taken by the industry. Channel checks have, indicated that companies are more serious this time. In the November to December period, Jeffries has stated an 8 to 12 rupees per bag price hike. JP Morgan in the range of 5 to rupees 50. That depends on what region the price hikes have been undertaken. And CLSA 10 to rupees 30 per bag hike. But the key question is, will they stick? Is it sustainable? And there are certain risks. First is lack of demand. While the sentiment is positive for the second half of FY25, if demand doesn't match up, that could hinder the sustainability. Secondly, industry and companies are prioritizing to meet their full year volume targets. That's why they're pushing volumes at lower prices, and this could impact sustainability of the price hikes. And lastly, in the near term, brokerages are saying because of the competitive intensity increasing and the aggressive capacity additions that are set to take place, that could have an impact on not many substantial price hikes in the near term. In terms of demand, where brokerages do expect demand recovery in the second half of FY25 as well as 26, factors like a pickup in capex, retail and rural demand doing better could help the industry. But what are cement companies aiming for? Well, while volume recovery is something that they're watching out for, price recovery is more key. Analysts do expect operational efficiency to drive profitability. But in terms of profitability, a 1% in change in volumes, which is driven by higher demand, drives only a 1 to 2% EBITDA change on average for cement companies. But a 1% in price drives a 4 to 5% EBITDA change. So, a better range in terms of price hikes would impact these companies' profitability in a positive way. In terms of top picks, one thing that we see is Ultra Cement is preferred by most brokerages. Morgan Stanley also prefers Ambuja Cement. Jeffries also prefers JK Cement in the mid-cap space. And JP Morgan also prefers ACC because of valuations and better price momentum in the south. And lastly, CLSA is relatively very selective with looking at high growth visibility and cost initiatives, and that's why it only prefers Ultratech Cement.
Very interesting, and this has been a theme which has been playing out since the last couple of days in markets. Let me bring on board Rakesh Arora, founder at GoIndiaStocks.com, to talk about just that. Good afternoon, Rakesh. Good having you here. Your take with regard to this one. First off, sustainability. Second, do you believe the price hikes are are already being priced in by markets, or is there some bit of positivity yet to be baked in to prices, because cement stocks have outperformed?
First of all, the intent is very clear from cement manufacturers this time around, and there's a possibility of series of price hikes. What is really helping is the demand is coming back in a big way. So October was like a single-digit demand growth of 5 to 7% for the industry. November, they've ended up largely, I would say, between 15 to 20% demand growth. And December started on a very positive note for most of the companies. So demand is extremely strong. And couple that with the intention to increase prices. So first round of price hikes have already happened on 1st of December. That's why you see all this buzz. They'll have to follow it up with multiple price hikes for this to sustain. The way it works is that, once a dealer thinks the next price hike is coming, they try to, get in as much material as they can. So it helps not only volume, but also builds up expectation of further price hike. So currently 10 to 15 rupees per bag hikes have been taken. Some of it will stick, some of it may not stick, but they'll have to take multiple hikes for it to go through to the level there they want it.
Okay. Rakesh, so point well noted. Neeraj here, good afternoon. What's your sense? I mean, if there is a capex revival from the government side, because forget private, but the government probably now needs to put up its capex as well. It had been on a pause mode. Does that lead to enough demand for the price hikes to sustain fundamentally as well?
Well, see, ideally speaking, demand should pull prices up, but that's never, I would say 100% true for cement industry in India. But see, help is only a phone call away. So when demand is decent, which we expect because government capex is definitely coming back, they have missed the first half and they have to, complete their budgets by March. So most of them want to spend the money, at least dole out orders before, 31st March. So demand is not an issue. And right now we are seeing some intent from the producers to increase prices because it's gone down to very low levels. In some of the regions like South India, they were loss making. So there is intention from the producers to increase prices, and so next few months looks decently poised. Both from demand point and cement pricing point.
Okay, and Rakesh, do you believe that some amount of the price increases are going to be skewed towards one region? Is there more appetite for price increase east, south versus west, north, and therefore are there going to be selective players which will benefit from this?
So, price increases will have to happen across the regions because these regions are not watertight. So, if there's oversupply in one region, they are going to push material into other region. And so price increases will happen across the board. Quantum might differ because cement prices had gone down so much in South India that to recover back to a normal level, they'll have to take higher price increases. So that is what is going to happen. But overall, I think most of the players are pan-India now, which are, which will really matter in this whole thing. And for them, it doesn't really matter much. They will be looking at all India price increases. So if they can get around 20 to 30 rupee per bag increase, that will be great.
Okay. Rakesh, so therefore my question is there are a clutch of very eminent investors who tell me that for a cite enough cement stock examples wherein capacities have gone up multi-fold over the last 5-10 years, say maybe companies in South India or otherwise, but it's not that the market caps have expanded. 2024 has but been a forgettable year for cement companies. Will 2025 be different, or you reckon there are better avenues to bet on?
So, the top two have been fighting for market share and they've been trying to acquire whatever comes their way. There's not too much of large capacities really left to acquire. So maybe that market share fight might be coming to a fag end. There are still few capacities left, which are sizable, which needs to be taken out. But both these parties have just recently acquired capacities, so there will be a lull of few months here and there before they become active again. So apart from that market share, fight, I think there's no real motive for them to lose money, and eventually they had to come to the table, I think. So we are seeing first signs of that. Let's hope it continues. We are expecting that cement companies should make margin of between 1,000 to 1,500 over the next 2 to 3 years. Whether it will be 1,000 or 1,500 will depend on how well these two guys behave.